Hello and welcome to IFX Expo Dubai 2025, the world's first, largest, and leading online trading expo. I'm Ramia Faraj from Forbes Middle East, and I'm so pleased to be your chair over the next 2 days. As you know, IFX Expo Dubai is the ultimate meeting place for brokers, affiliates, traders, investors, tech and service providers who are looking to succeed in the MENA region. It's your opportunity to connect with top-tier C-level executives to gain insights from industry experts and to access essential tools for business growth. For the next 2 days, we're going to learn and be inspired by our high-level speakers who will tackle every aspect of the online trading industry. So, without further ado, let's begin with our first session of the day. It is Dealmakers of the Desert, from oil to algorithms. All eyes are on the Middle East. Strategic shifts, massive investments, and a bold vision to redefine the future of finance are just the beginning. From Saudi Arabia's Vision 2030 and the UAE's push for digital transformation to the booming Fintech and investment landscapes in Egypt and Bahrain. Our panelists for this session are Wei Qiang Zhang, Managing Director, ATFX Connect; Samir Safar Ali, Counsel, Fintech and AI at Baker & McKenzie; Andrew Relich, CEO and co-founder of 10; and our moderator is Namir Khan, Chairman and founder of MENA Fintech Association, FILS. Please join me in welcoming them.
Very good morning to you all from the IFX Expo as well. As introduced, I'm Namir Khan. I'm the founder and chairman of the Middle East and North Africa Fintech Association. It's one of the top 4 fintech bodies globally, 26,000 plus members, working with regulators across the region very closely and ensuring that the fintech ecosystem scales and grows. With this, quickly, I would like to have, before we kick off, very quick, very small introductions from our panelists. That would be brilliant. Andrew, let's start from you.
My name is Andrew Relich. I'm the CEO and co-founder at 10 Financial. 10 has been in business for a little over 16 years, providing risk, pricing distribution, and other fintech technology throughout a globally distributed base of hundreds of retail brokers, banks, and buy-side firms around the globe.
Thank you.
Hello, everyone. My name is Wei Qiang Zhang. I'm living in London. I'm the MD for ATFX Connect, part of ATFX Group brand. We're providing liquidity to brokers and also working with high net worth individual, some top-tier banks providing matching liquidity and extra.
Hi, everyone. My name is Samir. I'm an English qualified lawyer, been based here in Dubai for the last 11 years. I focus on financial services regulation, virtual assets, ESG, as well as AI.
Brilliant. So let's just jump into the conversation quickly without wasting any more time. So, I'll start with you, Samir, from the regulatory perspective. So we had seen around $30 billion in digital asset inflows when it comes to the MENA region. My question to you is very quickly on the understanding on the legal perspective. Are the regulations ready for such inflows that we are seeing in the market, and of course, as the inflows are expected to further grow as well, are the regulations up for it?
So the MENA region, when it comes to virtual assets, crypto, and other forms of digital assets, the MENA region has been one of the first regions in the world to be, quote-unquote, crypto-friendly. It started with the Central Bank of Bahrain, followed very shortly by the Abu Dhabi global market. So just one minute on the regulatory landscape in the UAE. We have a federal regime, given that the UAE is a federation of 7 emirates, and we have 2 regulators there, the central bank that looks after stablecoin and the Security and Commodities Authority, relevant for brokers, and they regulate security tokens. And then we have 2 financial free zones. We have the DIFC just down the road for 1 or 2 minutes, and that has a separate regulatory regime. And you might have heard of when they say Abu Dhabi, they're typically referring to the Abu Dhabi global market. That's another free zone with a separate regulatory regime. To make things even more nuanced, outside of the DIFC, within Dubai, but not including the other Emirates, we have a new regulator called VARA, the Virtual Asset Regulatory Authority, which is the first dedicated virtual asset regulator in the world. So in terms of what we've seen, I mean, ADGM was the first, pretty much after FINMA in Switzerland and MAS in Singapore, to adopt the global golden taxonomy when it comes to identifying and categorizing tokens, security tokens, commodity tokens, and utility tokens. What we have seen is a continuum of development in this regard. I mean, we'll talk about real tokenization later on in the discussion, but for example, the DIFC, and also in Qatar, the QFC, the Qatar Financial Center, have issued digital assets laws to recognize that a transfer of a digital asset that has its value underlying in an actual real world asset or commodity, the transfer of that token is a transfer of the economic ownership of the underlying asset that that token represents. So we've seen developments in this area. Challenges remain on a number of things. Number one, across these regimes, not every taxonomy is 100% aligned. What we do have at the moment is a gap between what is a security token. I mean, it's almost how we test SEC style. The issue, what is a security token has not yet fully been clarified. So we need that clarification to be able to really understand the delineations between the two. Between security token world and non-security token world.
Do you have any gaps that we see when it comes to the world of compliance in digital assets?
There are a number of gaps. The biggest one, in the elephant in the room, actually comes to AML. And there is something that maybe the audience will know even better than I, is the travel rule. So if you're not familiar with the travel rule is basically the KYC protocols that have to go in terms of knowing your transaction, which we have in the fiat world through SWIFT and through existing correspondent banking. But when it comes to blockchain, especially cross-chain, that framework is not there, although the law says you need to have it. And that law is not locally driven, it's internationally driven. And this is a global issue, actually. And the MENA region is not alone in trying to understand what that means. And the technical solutions for that, regulators have tried to be tech agnostic and say, we're not going to regulate what tech to use, fine. But the standards in terms of what is required, even the standards, even the fields of information are not yet standardized globally. So that's an issue when it comes to the AML side of things, at least. There are a number of different issues.
So talking about the opportunities, my question to you would be, ATFX has been dealing with large transactions itself as well. So how do you see cross-border in general benefiting from technologies such as the distributed ledger, tokenization? What have you seen in that, and what are the benefits that potentially cross-border can leverage with these technologies?
Yeah, I mean, as an international company, we have around 20 offices globally.
And this is, sorry to interrupt you, but more focused towards institutional clients. How can they benefit?
Yeah, exactly. Because we are accepting clients globally, right? We have 23 offices, but from those offices, we have our in-state set up. Probably around 7 of them, we have in-state set up. So, say, for example, in each region in Dubai, we have clients from the region. They have cross-border payment, especially for our trading. There's an immediate requirement, especially on, for example, Friday night or Sunday, when the bank is closed, and when the clients are on margin call, they're short of credit, they want to send some money. But banks closed, how can we make sure they're going to send money as they promised, right? With a crypto payment, with a USDT payment, we can really make sure we are secured, client secured, we can provide a better solution for them. And also that killed all the conversions of different countries, the latency, extra. That has been really demanding in the last 2 or 3 years. That really also helpful for maintaining our clients. So based on all the legal work and the compliance check, we are allowed to do that in one of our onboarding entity. So that's big benefit for us.
Great. Andrew?
Yeah, I think Samir and Wade touched on some very interesting points that are both opportunities and challenges that we see in this market. So we're a globally distributed fintech firm. We're not a regulated entity, but we're exposed to many clients who comply with various regulations around the world. And what I love about this region and why we're so excited to be here is it's very adaptive, it's very progressive. Nowhere else in the world do we have startup brokers, startup banks happening and progressing over time. The age of this region and how quickly it's progressed in its physical build out, its regulatory build out, its entity structure is a massive opportunity. Despite being a desert, I think the ironic term of greenfield opportunity here, it's one of the best greenfields in the entire world that we see. But as Samir noted, that rapid progression also comes with some challenges. Regulations, like legal frameworks, built off of precedents, built off of enforcement and understanding, and that takes time. And you see a lot of evolving regulations here quite rapidly, and a lot of different regulatory zones. I'm traveling here from the United States, a global leader in over-regulation in finance, but with a lot of history and precedents where a contiguous area of 50 states and a massive continent is serviced by a handful of regulators, whereas in this market we can walk down the block and have gone through 3 regulatory jurisdictions by the time we get to dinner. And so that creates a lot of opportunity, but also complication. I think Samir noted it quite nicely in that standardization is essential there, and making sure that we understand the means and reasons for these different regulatory entities and bodies, and make sure that progressive approach to regulation and entity formation and everything that exists in this incredible market also tests those regulations over time.
So coming to 1.0, so how does 1.0's platform integrate into the institutional clients to embed trading into the systems? How do you... I'm talking about traditional trading systems over here.
Yeah, it's an interesting and great question. So, transacting and the real-time distribution of quote and trading information is relatively standardized across the world. We service 140 different liquidity endpoints in our ecosystem, and we have clients that range from retail brokers, where we started the business 16 years ago, to large regional banks that we service today. And the primary difference between the two is compliance and regulation, though the retail market has come a long way over the last decade, if not more. Banks have even more internal and external compliance. The way that we handle that today, we have a report we call the Rosetta Stone. It takes our trade data and the robust execution information that we store for every quote and every trade that comes in the system, and then translates that out to the different formats and regulations that's required to follow. So servicing that and being that standardization layer, as Samir noted, standardization is key there. Being that central point of standardization is an essential component of what we offer.
So coming to you, Samir, in terms of the investor perspective, I mean, we do see around, I would say around 2023, the fintech transaction volume crossed $200 billion, right? So when it comes to the investor interest, so what are as Andrew mentioned, the fragmentation also creates opportunity and also creates complication. What has been the investors' sentiment lately when it comes to, I would say, investments into the fintech, digital assets, Web3 world?
Well, I think VC investors in particular are very uniquely positioned, fintech or otherwise, to be able to help shape the culture of compliance of a company at the outset. So a lot of investors, I think, pre-FTX...
They've played a good role, a critical role.
Absolutely,
okay,
yeah.
right.
So I think pre-FTX, the kind of conversations I was having with founders and investors alike, I mean, we were looking at setting up exchanges, and some people would say, why would we even need to be regulated? Look at FTX, look how much they've raised without even being regulated. Why would we even need to go through that headache? Well, we can see why now, right? And so, ironically, actually, and much to my surprise, it has taken a while for that sentiment to resonate. I would have thought it would have been an overnight thing. Oh my God, criminal charges, insider information, amongst other things. None of that took a while for investor sentiment, at least in my experience, to resonate in how they do portfolio decision investments. I still have yet to see, other than with some very good examples, and I would beseech any investor to think like this, and anyone who's seeking investment to think about this moving forwards, is when it comes to compliance due diligence. A lot of people want to know about due diligence in terms of, what's your market risk, what's your, what are your strategy, etc. But the question about, okay, now let me know about your compliance. Typically in an investor due diligence, they say, for example, tell me about your liabilities. Are you being sued? Is the regulator knocking on your door? And usually sometimes the answer is no. But I always believe as a regulatory lawyer that if there are cracks, those cracks can lead to gaps, and they will lead to gaps. So addressing that from a very early stage, even proactively as someone seeking investment, to say, I know you haven't even asked about this, but here you go. I think that is really going to speak volumes for how you think about your business. And just very briefly, I mean, if we look at a totally different area, AI agents, right? I was at an AI event yesterday in Dubai. There's a chapter called, a group called AI Salon, and there's a Dubai chapter, 50 city chapters around the world. And we were talking about AI agents, about how AI agents is going to change basically everything everything and anything you do. And the question I had is, and people from Silicon Valley were there, and I said, what about liability? Because if an agent, a human agent, is doing things for you as principal on your behalf, their actions within the context of your delegation, they can cause liability for you. Is anyone thinking about this in the area of AI? And the answer was Silicon Valley just rushes ahead and thinks about these issues later. So when it comes to compliance, we still see that strong sentiment.
Can I jump in from my angle? Because it's a very interesting topic because you talk about investor. There's a hot topic recently about crypto exchange come to the CFD market. And we have been trying to tap into crypto exchange market even before last crypto winter. But I mean, from my point of view, from what ways research, we found the audience or the client base or investors from those two regions or two industry is very different. I feel on the crypto side, the investors is more like they have, if I may say, a religious belief about crypto. They put money in there, convert it to crypto. They don't want to move. They don't want to convert. But for our CFD industry, if we want to tap in the market, we have to ask them to convert crypto to fiat, and then they trade because of our regulation. And that's making us very difficult. And if they want to come to CFD market, they probably will offer the CFD product to their client. Can they convince their client to do so? That's something they need to solve.
So, I mean, just following up to your point over here. So as per Visa, last year, 35% of the overall fintech transactions that happened in the region, 35% of that was via cross-border. Now, when it comes to cross-border payments, from your experience, how can fintechs leverage AI and blockchain potentially in order to streamline the payment processes and, on top of that, potentially reduce, as discussed by Samir and yourself as well, potentially reduce compliance costs as well, which is a significant issue right now. What's your thought on that? Both of you can take this.
So it's interesting. The term innovation oftentimes is seen as synonymous with efficiency. The term regulation is rarely seen as synonymous with
friction.
Efficiency. Yeah, and that friction is necessary in certain ways. Samir noted a very interesting point I always look at in the crypto space, which is you have these evangelist, new innovators on top of technologies that have existed for a long time, hash maps and blockchain. Yeah. And they come and they say, look at this incredible new under-regulated thing I created, and you're like, well, you made a security. That is a security, what you've created. You've done it in an innovative way, but the laws that exist in order to allow securities markets to operate and function efficiently today oftentimes add friction. They slow the market down. They add protections to consumers and end consumers to make sure that they know what they're buying and that it actually exists. So this combination, this dichotomy between innovation and efficiency in the crypto space is one that we look at quite often, and trying to understand where those things are brought to play and why some of these regulations exist. 1-0 transacts 250 to 300 billion in notional USD volume a day. We execute trades in under 50 microseconds. Money can move very fast. Yeah. AML and KYC and funding and things like this are slow for a reason. reason. The reason is that you want to make sure that the recipient and the sender of the money is a legitimate, rational actor. They're not a criminal enterprise. They're not a banned nation state. And so coming in and saying, oh, we have crypto, now we can move money very quickly, we've been doing that for a while. But doing it at a banking level and physical delivery has roadblocks and speed bumps in place for a reason, for protections. And so balancing those two things. Another counterpoint to that, though, is crypto came in and they said we're a financial asset class, and by the way, we're open on Saturday and Sunday. And the industry's adapted to that. That's innovation. We've pushed our company, our technology to be 24/7. That's something that client base clearly wanted, and that is increased innovation, it's increased efficiency, but it came with a lot of overhead as well too, as we've backed that into regulated markets.
My counter question again would be, like, if fintechs were to reduce potentially the cost of compliance, right? Potentially, and on top of it, also, use these technologies that we have today. I mean, to me, what can they do?
Can you repeat the question?
So my question is, again, like, if you're talking about fintechs trying to reduce the cost of compliance,
yeah,
right? Currently, if you look at many fintechs who are operating in the market, significant cost, right? How can they use these technologies today, from your perspective, since you've been working with many fintechs and startups as well?
I mean, look, I think RegTech is part and parcel of all of this technological innovation development. Yeah. I mean, we've yet to see a really cool blockchain-enabled AML solution, because what is AML? AML is KYC and client due diligence. What is that? Okay, knowing who am I doing business with as an institution. What does that entail? Entails verification of certain documents. We are now getting governments that issue certificates digitally, not even on paper. So you don't even need to go and get a notarization stamp. Even in some places where you do the notarizations, like in ADGM, like in Abu Dhabi Global Market, the actual notarization stamp is digital. So there are ways that an innovative regulator can help to make that compliance cost less through its e-government and e-KYC and amongst other things. And just to note, like you were saying, Andrew, you're like, people say that regulation it's not synonymous with efficiency. I always do this at roundtables and events. You pick up a bottle of water in this country or any country, and you've got a mark here. It says Emirates Quality Mark NB-0002. In order to mass produce water and sell it to the market, there needs to be some checks that your facilities meet certain health and safety requirements. There's not plastic in this or contaminants in this bottle. And that's just water, right? When it comes to when we go back to the beginnings of the development of a marketplace across time and history, we come to an inception point where people are fraudulent in their practices. So then governments and policymakers throughout time or across the world, right, will come up with ideas about, well, how do we check that fraud is not being conducted here? So we have to have rules and regulations in order to benefit from being able to sell to the mass market.
I think, go ahead, Blake.
I think for the ML part is very interesting because I think we had some argument about if you introduce crypto payment, your tracking of the money, is that better or is that worse? Because if you're using traditional payment, you're tracking probably up to your bank level, right? What happened behind your bank, you don't know. But crypto, as far as I know, you have a ledger system, and you can track, if you wish, to the beginning of the transaction. It depends on your compliance, how robust they are, what kind of risk appetite you have. I think from our point of view, as long as we follow all the rules, we follow all the regulation, and also we put an extra method in place, we can make our ML even robust, even stronger.
And I think technology plays a role there considerably in driving efficiency in existing regulations. I think innovation in regulation is not finding an under-regulated area and then bringing the asset to bear and learning all the same lessons that the more regulated markets have learned. I think a great example of technology use in AML is the innovation of facial recognition technology against an ID and an onboarding. So you're not going somewhere that doesn't have AML. That's not innovation. That's taking a step backwards in how the markets have evolved. But taking a human being out of the process to verify that a passport matches the individual that is actually signing up using facial recognition algorithms is a great example of innovation. And I think throughout the market that there's varying opportunities to innovate. I often use these panels as an opportunity and a call to action to regulators. I background in AI, a computer science degree and a master's in AI back in when I was a kid in 2000 something in the early days. And always saw the opportunity there, not just in the algorithms or the process, but in the data sets. AI is nothing without robust data on which to model assumptions. A machine learning algorithm will give you an output on any data set. The more robust and comprehensive that data set, the better result you're going to get. Who has a more robust data set than the regulators themselves? Using AI at a regulatory level, taking all of this information that's coming from brokers and banks, et cetera, standardizing it, consolidating it, even higher than just regulatory jurisdictions, but at a global level, you could predict Ponzi schemes. You could see people overstretching their balance sheet. You could get ahead of credit risk and other things. And I think the innovators are in a great position to do this and need to embrace fintech as much as the constituents and regulated entities have.
The sentiment I see is that it's not the startups or the tech companies, it should be the regulators who should be focusing more on democratizing regulations or compliance in a way that the cost is low, but at the same time, compliance is there as well. Correct?
Yeah, I think you can have proactive regulators.
Yeah.
And then you often around the world.
Which is a rare thing.
Which
to
is
be
a rare
very
thing, and we
honest,
have
right?
it here. We're lucky to have it here. I mean, even ADGM was the first to actually recognize carbon credits as a financial instrument, right?
We'll come to sustainability quickly. Yeah. We have like 10 minutes, so we'll probably spend 5 minutes on sustainability. But I really want to touch base on tokenization, because that has been the flavor probably half the year, last year. I mean, that was a conversation that we've been having. Recently, we have seen Mantra doing this a partnership with Dealmakers as well. What's your outlook on tokenization, real-world assets in the MENA market for the year 2025?
I think it depends on what are we talking about when it comes to tokenization. So tokenization of financial securities, financial securities are all digital. We're not talking about physical, at least for public equity. We're not talking about physical share certificates, right? So it's all digital natively anyway. So there are regulations around the world, and ESCA, the Security and Commodities...
Let's talk about the regulations in this part of the world as well.
Sure, yeah. So ESCA, the Security and Commodities Authority, have just issued a draft regulation for tokenization of security and tokenization of gold. So that's going to be
of gold.
Yeah, it's not public, but it's in a small.
You made it public.
The letter of the draft is not public. It's known that they've issued a consultation, but when it comes to, for example, tokenization of, say, real estate. Right. Every other day I have a conversation with someone from Miami or California about tokenizing real estate. Okay, you can have a law that says the transfer of the token is a transfer of the underlying asset, and the underlying asset is real estate. But that doesn't mean that's only half the picture. The majority of the picture is actually at the land registry. Right? Does the land registry actually recognize that transfer? Because if there's ever a legal dispute, you go to who's the name on the title deed. So we've yet to see a sector-wide, across different sectors, initiative to say, how do we tokenize IP, real estate, commodities? At least we're seeing some development on securities.
Brilliant. Any thoughts, gentlemen?
I share the same sentiment. We often hear, why aren't we tokenizing security assets in the US? And I make the same joke of, like, we're not handing paper shares on the trade floor back and forth. This has happened for a long time. And I think that the fundamental challenge there comes back to, how do you verify what you've tokenized actually exists? And then now you start to walk backwards into regulation and AML and KYC and all of the things that have built out over time to be able to validate that a secured asset is what it is at the end of the day.
There is a way around it. You can actually set up a fund. And a fund is divided anyway. It's a portfolio of assets, and it's divided anyway into units. So you can say, I'm issuing tokens, and they're representative of the unit. But then you're in the fund world, and you're regulated as an asset manager. And most people that want to do tokenization projects want to stay way clear of that. So,
now, talking about, you mentioned carbon credits, right? Which is a very important focus for UAE. Altera Fund based out of Abu Dhabi. A $30 billion fund has been launched. Carbon credits framework has been launched as well in UAE. One of the only countries which had a regulated exchange as well. Then and the exchange was also tokenizing carbon credits, right? ACX. How do you see the digital assets world moving towards sustainability and embracing reporting metrics? Because VARA had also made it, there was a regulation which was which was more of a voluntary disclosure of your ESG as well, reporting when it comes to VARA. So, which means if there has been a voluntary, I would say initiative that has been launched, for me that is a signal that potentially that is going to become compulsory as well, looking at where the country is going towards. So not just UAE, and I would love to hear your thoughts as well, how your organizations are embracing sustainability when it comes to that. So, Samir, let's start from you.
So very briefly, so you're right. VARA, the first crypto regulator in the world, they've got these voluntary ESG requirements. ADGM has actually made it now mandatory for regulated and non-regulated entities to do ESG disclosures, right? So we're moving in the right direction. ADGM also was the first regulator in the world to recognize carbon credits as a financial instrument. We also see now in the EU with the EU allowances, and it's recognized under MiFID.
One of the only regulators to have an exchange on the chain. Let's not forget that.
But here's the challenge, right? So Air Carbon Exchange, ACX, right? They closed down. They opened up in ADGM because it's got a framework, but they've closed down to consolidate in Singapore. My estimation, and I think there's some commentary on this online, is the whole idea of, build a temple and they will come, is you don't always get that. Because for something like that to really take off, you really need to have institutional buy-in and government buy-in. And government, when I say government buy-in, I don't mean government endorsement, I mean government integration, right? And I think that was lacking probably in that project.
In general, we'll come to that, and this is where tokenization plays a critical role, bringing liquidity to the carbon credits market. Carbon credits market in this particular stage is missing liquidity, where there is demand, but the liquidity is still not there. And Web3 and digital assets is going to play a critical role in that. I know a lot of layer 1 chains going into that space. They're going into the tokenization of carbon credits and also working with distribution players as well to ensure there's liquidity coming towards the market itself. Gents, I would like to understand from your side as well, like how are your organizations embracing sustainability, which is a very important theme today for everyone all over the world?
So ESG is an interesting topic in this industry, in this forum. The environmental side of what we do in high frequency financial trading markets is difficult to avoid the impact on the planet. It's co-located data centers, it's 3-year amortization cycles on hardware that gets pushed out to the curb for new stuff. And so we internally try to look at ways that we can service our clients, keep them up to speed with the market, but recognize that impact and look back into how we can give back as an organization. I think tokenizing carbon credits is great, but it's a means but not the end necessarily. You need an impetus for action. If only one regulatory body or corporate governance structure globally says, oh, you need to offset your environmental impact with carbon credits, and it's not a global standard, then in a global economy, you're just going to move your entity somewhere where you don't need to do that, because otherwise it introduces competitive inefficiencies. I think the S part of ESG is something that I love to use this platform and appreciate the question to highlight what we can do as an industry to take the society part back and make sure that fair treatment of retail traders and investors, fair treatment of banking clients, understanding of DEI and the importance in raising diversity in our businesses, that's an area where we are equipped to give back, and an area where 10 is very focused. We're building out technology not just to make risk management more efficient, but also made massive investments this year and have some exciting announcements coming about how we're using data to help educate traders and help provide information back to our clients, focus not just on alpha generation through spread or commissions or swaps, but also retention. and longevity of the investor, and building out those initiatives, building out sustainability in the client base, in how we treat people and how we treat customers is an area where we can make a lot of impact in this industry and should be thinking about.
So S is very critical. Way.
Can I add something? Because you reminded me something about prop trading. To kind of answer your question yesterday about responsible, what we need to do, be responsible as a regulated broker compared to other people who probably not behave well. We had this kind of discussion about do we need to tap into prop trading market? We have this last 2 or 3 years to talk about this. We decided to launch that literally last month because we treat this one not only from a marketing point of view, that's a very good lead generation, but also responsible broker tap into, will make sure if we have proper investor, talented investors, traders, they can make money for themselves, for our company setup, we can pay them. So there are a lot of companies doing that, but they're not responsible. But for this one, also can be a education tool to make some investors really try it with a low cost. I think that's can be treated as a part of ESG as well.
I think we need a whole another hour to go into prop, but I think what a great example of the balance and dichotomy between innovation, efficiency, and the role that regulation plays in adding friction and speed bumps to protect people.
What I feel is that, you see, by the end of the day, sustainability is an important subject. We cannot avoid it. It's going to become a part of the business DNA. We have to embrace it. There's no one's going to be, can stay away from it. That's one. Number two is that, as they say that back in the days we used to talk about that we don't need banks, but financial services is always going to be there. In sustainability, we say that in order to make sure sustainability becomes a success, financial services in all walks is going to play a critical role. But all in all, it was a great conversation with you all, from regulations to understanding where the technologies are moving towards, how we can further embrace them, and most importantly, how can we use technology when it comes to, especially our sector, to make this world a better place. So thank you so much for your patience and listening to us as well, and thank you to the panelists as well for sharing their thoughts. Thank you, everyone.
Cheers. Thank you.
Thank you.